Good morning, good morning, good morning, good morning. Guys, Bitcoin just broke out of a bullish ascending triangle, and this could have Bitcoin pushing up at least $1,000 towards the upside, if not way more. But here's the thing, guys. If Bitcoin actually sees this move towards the upside, it's going to have big implications on the higher time frame. And the reason this is so important is because there are many of you who are looking to put on a short trade on Bitcoin. And while it's completely reasonable to be bearish, you may get a much better entry for your short position, an entry that could be far easier to manage. And for those of you who are bullish on Bitcoin, you could be looking at a really nice trade opportunity towards the upside. So in today's video, I'm going to first be telling you guys the implication of Bitcoin's big move towards the upside on the higher time frames. I'm then going to be giving you guys two levels for take profit opportunities for the longs, as well as potential short opportunities for the bears. And finally, I will be giving you guys invalidation points. So if either of the trades do not go our way, we can get out of the trade ASAP. So hey, if you want to make sure you catch yet another profitable trade, you do not want to miss this video. Alrighty, and here we are on Bitcoin on the daily time frame. And the goal of today's video is to essentially give you guys the key levels to be looking for, either for your take profits or for your short opportunities. And these are going to be levels that will make it easier for you to manage your short positions and also your take profit positions. All right. So what's going on over here on Bitcoin, guys, may actually have implications on the higher time frames. So it's very important to not get sucked into the lower time frames, even though we're looking at the daily time frame at the moment. We have to understand what's going on in the big picture. All right, so we're going to start off with the daily time frame, because right over here, guys, we have essentially broken out of a ascending triangle. And what essentially makes an ascending triangle? It's essentially a flat top where you're seeing the market try to push up, and is not being able to do so, but each time it does so, it puts in a higher low, right? It's putting in a higher low. So you're seeing upward pressure, but you're not seeing the equivalent downward pressure from the bears. If we did see the downward pressure, we wouldn't see a flat line here. We would see a sloping line, right? In which case, what we would have had is more of a symmetrical triangle where you're seeing downward pressure from the bears as well as upward pressure from the bulls. That is why, guys, a symmetrical triangle is considered a more neutral triangle, because it could break in either direction, while a ascending triangle is considered a bullish pattern because you're not seeing the downward pressure from the bears as much, right? You're seeing the upward pressure from the bulls. They're able to put in the higher lows very cleanly with the candle closes as well as the wicks. On the bear side over here, though, not so much, right? However, this pattern, guys, the bullish pattern, is only activated when you see a candle close above that flat line. Okay, we need to see a candle close above the flat line. And right over here, this morning, we got the candle close above the flat line. We closed above the flat line, and then we tested that flat line for a nice retest, and now we are pushing towards the upside. All right, so now that we've established that this ascending bullish triangle has broken and confirmed its direction towards the upside, what is its target? What is the target measured move for this ascending triangle? And for that, guys, all you have to do is measure the height of the ascending triangle. And as you guys can see, I've already done it over here. I've essentially taken a nice little trend line and marked it out from here to the top. You don't need to be too exact with this. You're just using this for rough guidance, right? Because you want to see confluence. As you guys can see, I'm now going to put it on the top of the ascending triangle right over here. And it's going to line up pretty well, guys, with this region of resistance, right? Now, this region has been very important. You guys can see how Bitcoin has respected this region multiple times, right over here. So we're seeing nice confluence between the measured move, the target, as well as this horizontal right over here. But here's the thing, guys. If Bitcoin actually gets all the way over here, even though we will see resistance over here, right? it's going to still be a massive win for the bulls. And I'm just realizing that as I record this video, Bitcoin has already pushed up $200 or $300 all the way up to 20,100 now, right? So going back to what we were talking about, if Bitcoin sees this move to its entirety, this measured move to around 20,755, guys, it's going to have implications on the higher time frame. Which time frame? Well, for that, I'm going to switch on over to the weekly now, right over here. And you guys can see that if Bitcoin gets up to 20,785, let's go mark that out, okay? If Bitcoin on the weekly time frame comes up there, okay, even if it does see a rejection, it's not going to change the fact that we would have officially taken out the prior week's high. Guys, the prior week's high is coming in at around $20,385. Let me repeat that, $20,385. The measured move of our ascending triangle on the daily time frame is coming in at 20,768, right? So we can essentially now on the daily time frame go ahead and mark out the prior week's high, and I believe it's this wick over here, guys. You see this? That's the wick, right? That's really important. You can go ahead and mark that out right over here. So if Bitcoin gets above that level, it doesn't need to close above there. If it even gets above there, it's going to officially take out the prior week's high, right? And through a price action perspective, that's going to be very important to the traders who are putting on their positions. Okay, this is going to have cascading effects on over to our oscillators as well, right? Because what we are seeing over here, guys, is bullish divergence get stronger and stronger, and it's going to be officially activated. Right over here on the RSI, you guys are seeing a higher low, right? Over here, right? This low over here, guys. Let me double click it for you to zoom in. Look at that. This low is higher than this low, correct? But if you look at what price is doing and you line that up, right, let's go ahead and line that up, guys. You're going to see that right over here, that low is not coinciding with what price has done, because price, guys, has essentially put in a lower low, right? But the RSI has put in a higher low. That is your bullish divergence, right? You're seeing a downtrend on your price, but an uptrend on RSI. All right, so let's take a step back and recap. First, we establish that there's a bullish ascending triangle on the daily time frame, and the target for that bullish triangle is pointing all the way up to 20,750-ish. Now, if we see that target be met, it's going to activate the bullish divergence on the weekly time frame. But now the question is, what is the target for this bullish divergence on the weekly time frame? And I've already gone ahead and marked it out for you guys. And right over here, I'm going to unhide these drawings. And our target is this zone over here, right? This is where even those of you who are looking for short opportunities should be paying attention. Because guys, while this is a take profit for all of you bulls, for the shorts, this is the zone that is going to matter for you, because this is the first zone of importance where you'd want to attempt for a short trade. Now remember, there are two levels I want to give you guys, right? Two take profit levels and two potential short regions, okay? So the first take profit region for all of the bulls out there would be this big move right over here to around 20,800 region. There's another region that I'm going to give you guys very, very soon, but this is the first region. And note it down, guys. It's a zone between 21,890 all the way up to 22,890. So that's a $1,000 zone. Okay. Now, this is just the first zone. Price could very well take out this high over here, right, of the second week of September, and get all the way up to this level. Okay. This is where the bulls want to be taking out even more profits. Okay. And this is the last level that the shorts want to attempt a short. Okay, this is the last level. If price breaks above this region as well, okay, at that point, this is going way further up, all the way up to like 36,000, potentially have a pit stop around 32, 33-ish, but this is going to have a much bigger move. So this is going to be the line in the sand, guys, for the bears, okay? If price closes above this level, you need to consider yourself invalidated on your short trade, and you need to exit it and not look for any short trades up until the $37,000 region, 36, 37. Okay, remember this, guys. Do not get stubborn on your shorts over here, because if you hold on hoping for a pullback, this could go further. Okay, so you have two zones marked out over here, guys. Okay, both are take profit zones for the longs as well as short opportunities for the bears. Okay, the upper zone is coming at around 25,100ish all the way down to 24,300ish. Okay, remember 25,100 to 24,300. That's the upper zone. The lower zone that's going to come first as price moves up is coming in at 22,890 all the way down to 21,900. Okay, so if you're looking to short, your invalidation in the upper zone is a candle close above there. Similarly, on the first zone that's going to come up right over here, your invalidation is a candle close above the zone over here, right? So if you start seeing any sort of weakness from the bears, if the bears can't push price down over here, guys, as a short trader, you want to be getting out of your trade and looking to reposition somewhere up over here. If this level gets taken out as well, you want to get out of that as well and try for another short opportunity somewhere around the 35 to 37K region, right? We'll revisit that when the time comes. And remember, guys, these zones I have marked out for potential short opportunities are take profit levels for those of you who are going to be long going into this move, right? But for those of you who are long going into this move, if price comes all the way up to the upper zones over here, I would not be removing my entire position, because if you leave even a tad bit in and you capture a bigger move all the way to the upside, because we don't know what could happen, right? Remember, regardless of the macro situation, anything can happen in the markets. Things can change on a dime, and leaving a small bit of profits in to ride the trend all the way up to 37K, right, could be highly beneficial to your account. Because remember, the same mistakes that short traders make while holding on to their positions that are in a loss could be the momentum that pushes your position to another take profit level. So always leave a tad bit in. You do not need to catch the exact bottom or the exact top. Okay, so we talked about invalidation levels for the bears, right? If you close above this zone, get out of the trade, try again higher, close above this zone, get out of the trade, and try again much higher after that, right? But what about the bulls, right? What if we don't see this entire move play through? So this is what I want to wrap up with. What is the invalidation for the bullish move towards the upside? And for that, we're going to go back on over to the daily time frame. And remember, we've established that this bullish move has triggered because of this daily ascending triangle. So the invalidation of this bullish move, right, is as simple as us closing back within this ascending triangle. So as soon as we close back, guys, this ascending triangle is essentially invalidated. In fact, at that point, the shorts could take an aggressive short trade by looking for a daily candle close underneath this level right over here, right? Maybe bring it down, yeah, somewhere around here. If we close a daily candle underneath 18,890, that's not going to look too good, right? It's going to be essentially a ascending triangle, break to the upside, failed continuation, and breaking back down, losing the trend, the upper trend that we put in, right? So that's going to have a cascading move towards the downside. But again, if we actually see that, I will do a updated video, because then price is going to get very interesting, guys. Very interesting, because look at what's going on over here. I think some of you guys are seeing it. If this ascending triangle fails to see continuation, shorts have a nice trade towards the downside. So don't miss out on that video. If you haven't subscribed yet, please go ahead and do so, and hit the like button while you're at it too. It really motivates me to keep going with these videos. All right, so to summarize, I highlighted the importance of this bullish move and the implications on the higher time frames. We laid out the key levels for the take profit opportunities as well as the short opportunities, and we also gave you guys invalidation criteria for both the longs as well as the shorts. So until the next video, guys, do the mango way, do the easy way, do the stress-free way. I'll see you guys in the next one. Ciao.